All right, week two outlook number two, starting with the GBP. From the daily, from the macro, we're still stuck inside of this bearish run, the initial leg or the initial portion of the bearish run, it seems. Going down to the 4 hour, what it's looking like is even though we were pressing up, we were so close to getting to the area of interest, but price has decided to pull back, um, basically giving back all of the momentum that it had on this bullish run here. It might be mitigating something inside of this. I'm not exactly sure what's going on here. The only thing that I can think of potentially is this price gap, and something inside of that wick. But based on how I'm looking at it, I would say the price gap. So we're essentially past 100% of this price gap. And so if it passes this low, then I can see price, moving lower to take out this liquidity point, possibly this liquidity point as well. I wouldn't like to see that. That would not be ideal because I'm looking for push up, but we got to yield to what the price action is giving us. And so as of right now, we're still waiting for the area of interest to be broken. We're still in the premium side of this overall, bearish run of this overall macro bearish price leg. So we're going to see what happens. I'm not too, you know, upset about what's happening. I'm just a little annoyed at this point with the Great British Pound, but hey, that's just what the price action is giving us, so that's what we got to play. All right, moving on. We're not looking at S&P. Looking at gold, so starting out from the daily, remembering that we are in the continuation of the bullish run. We had a break of structure, but as I noted it as a break of structure, we've decided over the past few days to pull back deeper into, something in this area. I'm not looking at it from the daily, but this is what we're seeing right here. This is what the price action looks like on the daily. So scaling down to the 4 hour, I had annotated, this price gap here to see if price was going to react. I believe I said that I wanted to see this high taken 50% mitigated and then we get a reaction. We actually did get a very, short reaction here, and then we pressed higher to fill 100% of the price gap, and then we ultimately pressed higher. As of right now, so I'm not exactly sure what is going to happen with this. And so when I'm not exactly sure what's going to happen to this, well, what do we do? Instead of looking at the trees, instead of looking at the leaves, we go back up and look at the forest. So from the macro perspective, what I'm seeing is continuation of this, overall bullish run. I would classify this still as a break of structure, but we've pulled back deeper into the premium than what was anticipated. So as of right now, I'm going to sit on the sidelines a little bit with this. If I'm looking at it from the 4 hour perspective, the last potential price gap that I see, which doesn't really have a lot going for it, in my opinion, would be this price gap here. Now, this is the last essentially premium or seller's side of defense before we continue taking out the all-time high, in my opinion. There's nothing left here. There's nothing left in this price gap. We've pressed both of them. So if price is going to continue running, it's going to run into this price gap. And if we do get a response to push us back down and basically solidifying that this is a break of structure and this is just an overextended, pullback, then what's going to happen is we're going to mitigate this price gap here and then run lower. If not, then we're just going to continue looking for plays to go higher and continue on this bullish run. But if this price leg is the true price leg, what I would like to see is price pull back into this price gap and then move lower. If it's not the true price gap, I'm sorry, if this is not the if this overall daily price leg is not the true price leg from this low to this high, and this was just essentially a liquidity draw, then we'll analyze it to see, hey, okay, if this is going to break the high, then this is going to come lower, and then we would look for a pullback and continue on with the current trend. If not, I would like to see, a couple of scenarios where we mitigate that 4 hour and go lower, solidifying that this is the overall price leg, or we push higher and then pull back to take out this low, which would, solidify that. But let's not extrapolate too far. As of right now, the price action has gone past a couple of the areas of interest that I was looking for on the 4 hour time frame on the immediate price action of after taking out this low. So the last line of defense for this would be this price gap here on the 4 hour time frame. as an area of interest, and then I would look for price to move lower. So that's what I'm seeing currently. The two scenarios: price gap lower or continue higher. That's what I'm seeing. All right. To the daily, going on to NQ. NQ decided to forego everything that I wanted it to do, but that's just, the nature of price action. I said I was sitting on the sidelines for this anyway. So on the daily, I had annotated as like an internal price leg was this low to this high. I annotated 2 points of interest or areas of interest on the 4 hour time frame, and price decided to forego that. Essentially here on the daily, mitigating an area of interest that I don't really look at anymore, but it mitigated that area of interest 100% feel perfect and decided to take out that high. Now if I look at it from the 4 hour time frame, the reason why I was not really looking at it for entries is based off the fact that this was the price gap that I was looking at. Not only though, looking at it in hindsight, this price gap actually straddled 50% of this price leg. So you know it's a little interesting to look at. So this may not actually be something that is worthwhile to look at the moment as far as like internal price leg. I guess the ideal scenario or the ideal line of logic here would just to be look for continuations of price action, as in every pullback into a 4 hour, candle or price gap as price moves higher is just an opportunity for entry as we move higher. Not necessarily we should be looking for, anticipating the price is going to pull back this low, especially after we have this bullish run here, which seems to be solidification of, or balance of this overall internal leg. So I'm going to get rid of these two areas of interest and clean slate. We have run this internal liquidity point here. And so now it's a matter of, do we look for a pullback deeper, which is highly unlikely if we're going to continue the bullish price action after breaking this, or do we just, simply pull back into this price gap here, giving us opportunities for bullish price action. So I would like to see price draw deeper into, or at least tap 50% with the black candle, not the green candle, but deeper past 50% into 50 to the 100% range, and then move higher. But it is a little interesting only because I could technically call this a price gap and say that we did fill 100%, and that would justify the action and mitigation here. And that's pretty much what I'm going to do, is say that we did, generate some sort of inefficient pricing. We pulled back, and that's what led to the price action here. So either what's going to happen based off of the action and mitigation of this price gap is we pull back. I mean, yes, this is the price gap here, but ultimately, what I could see is price coming back to mitigate, this area of interest, which is potentially a sponsored candle. And once we do that, I would like to see price, react and then continue the price higher. So classifying this right now as a potential break of structure and internal break of structure, and I would like to see price, pull back, mitigate this, and continue higher. If it does, break this area of interest, then I'm not exactly sure where price would be looking to move towards, considering that everything in here is pretty much balanced. I wouldn't necessarily look at this wick as a potential area of interest because this wick here balanced this candle already. I mean, yes, this is, if you look at at another time frame, that is a liquidity draw there, but that's not how I'm looking at the markets as of right now. So if this area of interest breaks, I can see price, potentially two actions: break of structure or liquidity draw at it, or we respect the action and mitigation here, and then we got plays to press us to continue with the price action moving in the bullish direction, aligning with the macro trend. So that's what I'm seeing here on the NASDAQ currently. All right, YM1. So we've had a lot of volatility here on this pair, and I'm loving it. We have break of structure of all-time highs. We then, after that, pulled back ever so slightly to balance out this very, very, very immediate price gap, which exists from this area. this here. And so this did go, a little bit greater than 100% of the price gap, but whatever. This is what price mitigated to give more fuel into pressing higher, and that's exactly what it did. And then it seems that we've peaked in the market, and now we've got a very high momentum sell off here, in which we've sold off into this area of interest, which is a sponsored candle here on the 4 hour time frame. We've tapped 50% of this area of interest, but the problem is this is very high in the premium. I guess as far as like considering this structural point here, this could be very high in the premium. And so looking at it from the macro perspective, if we're looking at it from here, you can see that this here we had a draw on liquidity, which is the crux of this entire price action analysis that I was doing earlier in these outlooks. And we ran higher to take out, we had a break of structure here, and now we are pulling back. And so if I was looking at this from the macro perspective, I would say we have a low and a potential high here, and then scaling down here to the 4 hour time frame, we can see just from the eyeball that this really doesn't look like it's going to last or stand. I do see inefficient pricing just below it as well. Not only that, there's inefficient pricing, which isn't, I wouldn't really, use it too much now that I'm looking at it, but there is inefficient pricing down here. But if price pulls back all the way back here, I'm not really confident in its ability to prop up a continuation of a move to go this higher. So if I'm looking for anything, I would look for sustainment of this area of interest here, or we pull back deeper into this area of interest, which is filling in, this price gap here and 50% to 100% of that, and then continuing higher. If it pulls back any lower, I'm not really seeing, because all this price action here to me looks pretty much balanced for the most part, just based off of the 4 hour time frame. So I would place my eggs in the basket of this area of interest being mitigated here, or this area of interest sustaining, if we are going to continue the overall bullish run. And obviously the next target would be the all-time high, which is the last or the previous liquidity point that was just generated today. So I believe that is it for the outlook. If you have any questions, please let me know if you're in the RCV chat or in my chat. Peace.